Welcome to XM.com. You're watching this preview video in which we'll take a closer look at the Nonfarm Payrolls report out on Friday and the outlook for the dollar. I'm Christina Marujas. With me today is our senior investment analyst, Marios Hadjikyriacos. Marios, the U.S. economy appears resilient and incoming data seem to corroborate that view. Now, the latest NFP report out on Friday. Do you think this data set will also highlight the resilience of the U.S. labor market?
Hello, Christina. Well, the labor market has certainly been resilient in the US, but I actually think this might be a slightly disappointing employment report, and let me explain why. So, according to the official forecasts, it's another solid report. So, non-farm payrolls are expected at 180,000 in October. That's almost half what we recorded last month when it was 336,000, but it's still a decent number overall, Christina. Now, the unemployment rate is expected unchanged at 3.8%, and wage growth is seen slowing down a little bit in yearly terms. Now, the important thing, I think, the important aspect of all of this are the potential surprises. And in that sense, Christina, most of the early indicators point to a slight disappointment in this employment report. So specifically, business surveys from S&P Global showed that the rate of employment growth slowed down very sharply in October, and it was only marginal, so slightly positive. Now, we also had those strikes at car manufacturing plants, and those will subtract about 25 to 30,000 from non-farm payrolls because workers who didn't receive a salary during the period when the jobs data were collected, those workers are treated as unemployed. So we have these downside risks for this employment report. Now, that being said, we didn't have any signs of mass layoffs either. So applications for unemployment benefits, which is where you would expect to see the first signs of mass layoffs or mass firings in the economy, those applications remain very low. So employment growth is gradually losing steam, Christina, but companies are not firing their workers either. We've hit that point where the labor market has started to plateau, essentially, to flatline, where we are not seeing a lot of employment growth, but we are not seeing employment losses either. Now, bear in mind that for this employment report, we are not going to have access to the ISM non-manufacturing survey that will be released after the official employment data on Friday. Therefore, investors will have one less data point than usual to try and predict non-farm payrolls with.
And let's turn to the market reaction, Marios. The dollar has been holding strong. Could this NFP report add fuel to its rally?
Yeah, so look, the dollar has been strong, and the two main reasons the dollar has been strong is that the US economy is performing better than everyone else. So economic growth in the US in annualized terms was almost 5% in the third quarter. And behind this economic strength, I think that the big factor behind this strength is heavy government spending. The Biden administration is running an enormous budget deficit that has helped to safeguard economic growth, and it has also helped to prevent a recession. But at the same time, this massive deficit has sent US borrowing costs higher. So yields on US government bonds hit 5% in October, and I think this story is likely to persist for some time, Christina. I think that even if we see a disappointment in non-farm payrolls and the dollar suffers some damage, I think that's unlikely to change the broader positive trend. The US economy is the strongest major economy right now, and it also has interest rate differentials working in its favor. Bond investors can earn an annual return of almost 5% in the US. That's the highest among the major economies once you account for inflation. So I think that this combination of solid US fundamentals, high interest rates, and the lack of any other attractive alternatives in the FX market. So the euro looks pretty ugly with recession risks in Europe. The yen has been devastated by the Bank of Japan's refusal to raise interest rates. You have China risks, casting a shadow on other currencies like the Australian and the New Zealand dollars. So I see a situation where the outlook for the dollar looks quite solid and the outlook for other currencies looks to be quite dark. I think that's a combination that can keep the dollar supported moving forward overall.
Marius, thanks so much. Non-farm payrolls are out on Friday. This was a preview video. Thanks for watching at xm.com.